Hello everyone, welcome back to the channel Best Place for Long-Term Stock Investors. Now, what are we going to talk about? Two things, maybe three. One, we're going to talk about CEOs leaving, JF Tech and Berjaya Corp. What does this mean for you if you're an investor, or if you're not an investor, as an onlooker, how can you take advantage from this potentially? Number two, we're going to talk about the 10K withdrawal from EPF. Whether you should take it or not, and if you're going to take it, what should you do with it? And of course, we're going to be answering a couple of questions from Instagram at the end of the video. As usual, as a disclaimer, none of what we say should be taken as financial advice. If you need that sort of advice, please speak to a licensed professional. Now, as another disclaimer, also, we do not own any of the stocks mentioned in this video. However, we do, of course, own EPF.
So if you're interested to build your portfolio to a 6 to 7 figure, but you don't know how to, you can check out our free training, link in the description and comments. So the first slide we're going to be looking at is the CEOs resigning. So over here we have Mr. JF Tech and Berjaya Corp. Both of the CEOs actually resigned on the same date, which is on the 18th of March. But funny thing is that if you take a look at the Bursa's announcement, you actually notice that JF Tech actually did announce the resignation of their CEO. However, Berjaya Corporation did not. So what do you think about this?
I don't know. Everything is about speculation. But what I can say is that if, Mr. Jalil from Berjaya Corp actually quite publicly say that he'd like to step down, and if it's not yet, it means that there's still things going behind the scenes, right. So that the communication is clear. At least that's what I like to assume. I hope there's no big friction going on and miscommunication. And now on JF Tech's side, you have Mr. Dylan, right? And he also decided to pursue other opportunities. To be honest, since they keep using this word, right, pursue other opportunities and pursue personal interests, that got me to think that it's a very vague statement, right? It's almost meaningless in the sense that you actually don't know what they are wanting to do, and you don't know why they are leaving, right?
Yes.
No one's going to say, well, I'm leaving because, I don't like my boss, right?
Yeah, I mean, people just want to be private about their lives.
Yeah, so which makes sense. But yeah, how would you make sense of these two companies, right? So, I mean, for context, those who are listening will be sort of addressing this question more in the frame of what would you do if you already hold the shares or if you're looking at the shares?
Personally, I'm pretty sure that the former CEO or maybe even the founder of the company actually did thought through. Like after when the CEOs wanted to resign, right? I'm pretty sure they have a plan B to make up for these changes. But if let's say a particular CEO actually have a lot of impact in the company, right? I, as an investor, I'll actually be more cautious about it because I'm not sure whether the next CEO do they have the capability of running the show as good as the one that actually just left.
Yep.
So, but I didn't really study further on JF Tech or Berjaya Corp,
Yes.
so I cannot really give much comment. But all I will say is, as an investor, right, if the CEO that left actually drove up the business like multi heights, and he actually made a lot of changes, and all of the management team are actually very aligned with the CEO, right?
Yep.
And then suddenly he left. I think to me that is a big red flag.
And it was also the time in which
in which they left.
How quick, right?
Yes, correct.
Yeah. Because especially in Berjaya's case, I thought that it seemed a bit too fast given their plans for divestments and all that, right?
Yes.
And not everything is done yet. But I think before we go to Berjaya Corp, right? Let's touch a little bit on JF Tech, right? Suppose you are shareholders. For those who don't know, JF Tech is into things like test sockets. They're very linked to the semiconductor and also the telecommunications industry, among many things. And I'm obviously not a technical expert on exactly what they do, but what I hear from people who are good, who understand the business, is that understand business on a deep technical level, is that the products that JFTech do is a bit like the heart of a semiconductor device or anything, right? It has to do with the energy, right?
If I'm not mistaken, they are actually working very closely with Huawei, right? One of the
I'm not too sure about that, but certainly they are very crucial in telecommunication devices and all these semiconductor devices. We won't go too much into the technicalities. I think we leave that for another video.
Sure.
But the question you have to ask, right, as a shareholder would be, okay, like, is the company still intact, right? How important was Dylan with regards to the company? That will give you an answer whether you should hold or not, right? So you got anything you want to add?
I cannot comment much because I didn't really, I didn't really study the CEO's background or whether he actually gave a lot of contributions to the company. So with that, I wouldn't really. It's actually a neutral view for me, lah.
Yeah,
I'll say that, lah.
Sure.
Yeah.
I mean, just to add a little bit more on JFTech before we move on to Berjaya, is that JFTech, you have to see what industries are they linked to, because Warren Buffett used to say, right, like you can invest in good management, but if the industry is bad, it's a bad investment. So of course, JFTech is I'm not saying that this is a buy or sell call, but certainly JFTech
it's in the industry that is striving,
growing, right? Like it's thriving and all that, right? Valuations, whether you should buy it or not, this is a completely separate question. But so then you have to ask, right? Like, okay, like, is Dylan leaving actually going to affect this? And I would say no. Does this mean that Dylan leaving is good or bad or unimportant, as you rightly pointed out? I don't know. And this is really fresh off the press, so we can't really comment much.
Yes.
But let's move on to Berjaya. Unless you got anything else to add on JFTech.
No, I'm actually more interested in Abdul Jalil's
Okay, so
resignation.
go. What are your thoughts?
I think he came out quite surprised. To me, it was quite a surprise that Vincent Tan actually let a non-family member to run Berjaya Corp.
Yes.
Yeah, so that's one thing. I think Mr. Vincent Tan actually put a lot of faith on Mr. Abdul Jalil.
And hold on, for those listening, actually we have a video that we did quite a while back. You can check out for our response to like his appointment and his plans. Link in the information wherever, top right. Sorry, go on.
Yeah. So to let a non-family member to suddenly run Berjaya Corporation is definitely a first for me when I see this kind of news. And he actually did deliver quite well. I mean, from what I see,
his plans were sound.
Yes, was very sound. He was selling non-profitable assets, and he actually managed to. I'm not sure whether is it because of the timing that we are in the recovery phase. That's why Berjaya Corp's financials were actually improving. But he did what a sound investor would do.
Yep.
I mean, of course, because he's a fund manager at
at heart.
Yeah. And he actually managed to help to turn around Berjaya Corporation's financial. So when I see these deals, it was actually quite a surprise to me because he actually did, if I recall one of the news, he actually was very confident that he can basically say bring Berjaya Corp to multi-high level.
Yes.
That's what he commented. Yeah, and him suddenly stepping down, right? It was actually quite a shock to me, even though I'm not an investor.
Yeah.
Yeah, because I thought he's the type of person who'd be committed to run the show. But what do you think about this?
I think let's contrast to JFTech, right? Berjaya Corp owns many, many different things, real estate, land. Of course, you have
F&B.
The Toto, you
Toto,
have F&B, right? 7-Eleven. So they are a collection of mature businesses that are cash flow generative, but they're not in the growth industry, unlike
JFTech.
Allegedly JFTech, right?
Yes.
So I think the situation is a little bit different. What I would say in this scenario is that actually management is more important in the case of Berjaya versus JFTech. It doesn't mean that Datuk Fong is not good or anything. It just means that there are certain tailwinds that are pushing JFTech up, that in the event that they have a bad or a mediocre CEO, they can actually do well. Again, I want to be clear, it doesn't mean that the CEO or Datuk Fong is mediocre. But in this case, in Berjaya's case, you cannot have a mediocre CEO. You need someone who is good, right? However, I think for most people who are investors in Berjaya, or at least those who are serious, right? Not those who are speculating. The thesis is that when Jalil took over, he was going to make a lot of divestments. And all of these divestments will be worth way more than what the market cap is currently.
Yes.
Right? Whether it's the land, because a lot of the lands were not revalued for 10 years, if I'm not mistaken. And then 7-Eleven and Starbucks were rumored to be taken over by this Taiwanese company. And so there was all these plans that Mr. Abdul Jalil had in mind. And that was the thesis, right? It was a pure, what we call asset play, or, if for those of you who are in our SIB community, it's a liquidation value play, right? Like basically, if you force sell all the assets today, how much is that? Let's say 100 million, and then if the market cap is 40 million, then that's an undervalued company, so to speak. So that was the whole entire thesis for Berjaya Corp. And so what would I do as an investor if I were thinking of holding it or thinking of buying it? I'm not, but what I would ask is, okay, there's this plan to divest, right? But is that going to happen with or without Jalil? And my guess would be that even without Jalil, there will still be plans to divest. The question is, how should the divestment go about? Will it be as fast, as good, or as intended as Abdul Jalil, or not? And the final point I will add about this, let's call it saga, is that Mr. Abdul Jalil wants to leave because at heart, he's a fund manager.
Yes.
Right?
Yes.
He's a capital allocator. Now, here's the problem with capital allocators is that it's not a bad skill, obviously, but it's not something you can expect them to be there for a long time. Because to run a business requires a totally different skill set.
Yeah.
And you want longevity. And someone who is a fund manager, he's just coming in to essentially what I call corporate slicing and dicing, right? But I don't, and knowing fund managers, knowing myself as an investor, getting your hands very dirty and, addressing all the operational issue might not be something up my alley. And I do believe Mr. Abdul Jalil is in that category because he himself said, I believe on Twitter, or I can't remember where, that he would like, as he pursues his personal interests, he would like to return to something more like fund management style. There's a lot of conspiracies going on. I'm not going to talk about it.
All right.
And I think the proof is also when he said in his Twitter that the children is a lot happier when he's at home. So I'm just reading between the lines. Yeah, but anything else you want to say before we move on?
No, actually nothing much. But just take this. I would say just take this news as a pinch of salt. Don't get too overwhelmed with this kind of news.
Yep. All right, we'll move on.
By the way, guys, if you're interested to join our private research team, you can actually do so by sending us your report. However, it must be in a Google Doc or Google Sheet format. And please do tell us about the business qualitatives about the company. What do you think is the growth driver, the risk, and your own valuation about the particular company. And please don't only send us the financial data, because if you do so, we might ignore your report, all right? So make sure to send it at the email here. Okay, so for the next topic we're going to talk about, which is none other than EPF again. I think we actually talked about this, I think the last few deep dives.
Yeah,
quite a bit.
2 or 3 ago, yeah.
Yeah, and this is about the withdrawal actually for the 10K from the EPF savings. And if you didn't know, actually, fun fact, if let's say about, I don't know what's the amount of EPF member that
6.3?
6.3
eligible members.
6.3 million, right?
6.3 million
eligible members, right?
Correct.
So if let's say all of these 6.3 members actually withdraw their 10K, it will actually liquidate about 63 billion ringgit in the EPF fund. And actually, there's another statistic over here that if you recall, back in 2021, there's this also another withdrawal scheme, which is iLestari and ICNA. Yep. So that one in total,
and the withdrawal after that in July.
Yeah, and ICTRA also.
Yes.
And if you combine these two withdrawal schemes, you actually add about around 164 billion, which is about 15% of EPF's current portfolio value. So if for those who don't know, EPF currently holds about 1 trillion.
Yep, 900 trillion.
Yeah,
Like
it's around there roughly. So it's about 50% gone. And yeah,
15, sorry.
15%, not 50%. Yeah, 50% of Malaysia gone already. Yeah. Yeah. But anyways, I think there's another interesting fact that if you look at the slides over here, if you take a look at the charts, right, you see the title there, which says that the wealth of the top 0.3% of EPF members is actually equivalent to the bottom 65%. So now what that means, or how would I interpret it, is basically the money that they had in EPF, the top 0.3% of them, they had in EPF is actually equivalent to the millions of people saving in the EPF, which is the bottom 65%.
That's right.
Yeah, and it's actually pretty interesting to see this kind of statistics, which brings to show that many people don't actually save their money. That's a sad reality.
That is no. I think with EPF also it's mandatory, right? In most corporations.
It is.
So it's also a sign of low income, right? Low wages as well.
Right.
I think with EPF the question is, okay, should you take out, and what are you going to do with it if you take out? Right. I think that's the big question.
I think we did ask this question in our Instagram stories, and
Yes.
we got all kind of interesting comments
Right.
it. Yeah, but most of them are actually pretty rational, I would say. I mean, if you didn't check it out, most of the answers that we got is that they prefer to store it, because after they see the 6%
They'll keep it
dividend
there,
rate, they prefer to keep it there. Some say they want to invest in themselves, which is totally fine also. But
some say take it out, buy watches, right?
Oh yeah, some say take it out to buy watches. But to me, actually, if you were to withdraw your money, right, I think the first thing you want to know is that first, which income bracket are you? Are you the top 0.3% or are you at the bottom 65%?
Yeah, and actually, sorry, before I let you go on, right? Actually, the 6.3 million eligible. Sorry, with the typo there. It's not 63 million. That's twice the population of Malaysia. But it's probably the eligibility of the members is probably for people lower.
Yeah.
If I'm not mistaken.
Correct.
Right?
I think it is also.
Yeah. So not everybody will be able to withdraw. So I just thought I'd add that in here. Go on.
Yeah. So coming back to which income bracket are you at? So let's say if you're at the top 0.3%, it's essentially 10K to them is like nothing I would say It's like it's only like 0.00, I don't know how many percent of their savings. But if you're at the bottom 65% and you withdraw 10K, it's about I would say 20 to 30% of your savings. Yeah, it's actually quite a huge disparity if you compare for these two. So first thing is you need to identify which income bracket are you at in.
That's right.
Yeah, I assume that most of us are at the 65%. So if you are, and if you don't really have enough savings, I would actually highly encourage you to just keep it there.
Yeah.
If you don't know how to invest or get a better return than EPF,
correct,
then put it there. But if you need the money urgently, I mean, there's no other choice, right, than to just withdraw, or maybe even, I don't know, take a side job or something, to like increase your income. Yeah, but what are your thoughts about all this?
I think the big question, like you rightly pointed out, will be those people who are in that 10%, right? Earning that have less than 40,000 ringgit. Because if you only have 40,000 ringgit, it's a quarter. If you have 100,000, it's only 10%. If you have 500,000, that's 0.2%, something like that, right? Not sure if I got that right. Yeah. So the higher up you go, the less relevant this, right? So the 0.3, somehow if you're eligible to get this withdrawal, just go on a holiday, right? Just use the 10K, go on a holiday.
Yeah.
Or, donate, right? But the question is, if it's big chunk of EPF should do it, I think you raised a good point, right? I think it's very trendy for some people to think, I'll just take it out and then just, invest in whatever is going to do better. But provided you know what you're doing. And to be fair, a lot of people do not know what they're doing because they focus their lives on their jobs or whatever. How can they actually improve their skills through investing? So, however, we also cannot treat the 10% below with all the same scenarios, because the 10% might be a fresh grad. So if somehow you have 40K in EPF and you're a fresh grad, taking it out might be quite interesting, because you might take it to maybe pay for a course that you want to partake in, or maybe you can take it out as seed capital for you to start investing and learn investing. But let's say if you are at that bottom tier, it doesn't have to be 40K, right? I mean, just low in general. But you have a family to feed, right? Then it is even more attractive, right, to take it out to feed your family.
Yes, 100%.
Right?
Yeah.
But then again, if you're lazy and you just want to, you don't really want to do much, then just leave it there. So it really depends on the circumstance that you're in. But I want to move on to how this impacts EPF as a whole, right?
Yeah.
And we actually did the math. It's about 15% of the entire EPF. And very likely, they will have to sell equities and fixed income
instruments. But where do we think, which part of the asset class that they're actually selling, or maybe even which market they're planning to sell? Our speculation is that maybe they are selling some funds from the overseas.
That makes sense.
Yeah.
That makes sense.
I just wanted to point it out right there. It wouldn't be real estate because it's going to take time.
Yep.
It's not like you can get the money in like months unless you are...
this is a ready buyer.
Yeah.
But I think they're going to sell more equities, that's my guess, than fixed income.
Yeah. So,
because,
to end this whole part, I think just use your 10K wisely. Yeah, don't just blindly withdraw your money just for the sake of the
don't
scheme,
gamble it,
Yeah, just don't gamble it.
Enjoying the video so far. If you are, remember to like, comment, subscribe, click on the notification bell so that you know when new videos are out fresh.
Okay, so for the Q&A, by the way, if you guys want to ask us any questions, we do answer it every week in our quick dive. So if you have any questions, you can just make sure to go to our IGD there and comment at our story. But anyway, so for today's first question we have is by Luke Han 93. So he asks, does financial quantitative analysis applicable in Malaysia market? Does local institutions use this method? So what do you think?
I think it's a requirement, actually. They do use quantitative analysis because you have to understand how to read financials, how to interpret them, or at least understand the different types of interpretation when you right? Like rising trade receivables, for example. Is that good or bad, right?
Yeah.
If good, like how? If bad, how? So that is something to take note of, because at the end of the day, they say numbers don't lie. We lie to ourselves about numbers, but numbers itself don't lie, right?
We even lie about our age. Come on.
Yeah, exactly. So, so yes, the short answer is it is important, and I will encourage people to learn about financial or quantitative analysis. A lot of people like to say that investing is all about just the story or just the qualitatives and all that, which I find to be inaccurate. It's not all about, right? A big chunk of it is about
70%
and the story. No, actually, I'll put it 50-50 because I believe that they work together, right? So the story is important because you need to know what the future will look like, but at the same time, you need the numbers to validate the future.
Right.
So, a story without numbers backing is a fairy tale.
Yeah, that's true.
Right.
But I also actually initially I have the same thought as you.
Yeah.
That both qualitative and quantitative analysis should be paired together and must be an equal contributions. But after like studying companies like Genetech, right, for example.
Yep.
By the way, if you guys haven't checked out our latest deep dive on precision manufacturers, you can actually just hop onto our website, learn.fire.co. There you can find our deep dives over there. We talk deeply about Genetech, Greatech, and a few other precision manufacturers. But coming back to
Yes.
here, so I actually did study Genetech before it flew up like 5 to 10x. And I actually thought that this is a company that wouldn't really make it per se. I won't say like successful in a way per se. I would
Yep.
just say that because their financial statements are actually pretty
Mediocre lah, yeah.
mediocre.
Yep.
But to me, it was pretty run down because
Yep.
their cash flow wasn't there.
Yes.
And then they are constantly making losses all the time, and they're taking in a lot of debts.
Right.
And that actually made me pull away from me from investing in Genetech actually. But
Yes.
I did know that they have a story about that they are going to divest their business to diversify their business into EV space. And yeah, actually that actually made me change my view
Sure.
on the 50-50%. So I'll actually put in more emphasis on qualitative
Right.
than quanti. So I'll put like 70-30%, around like that.
Yeah, I think when I say 50-50, it's important to note that if you invest in something, you can invest in something just based on the story. The question is always like, how much do you put inside it?
Yes.
Because you see now when we look at Genetech and we say, wow, it's a success story, right? The big question is always, do we have enough information when we make the decision? That will tell you whether the decision is right or not. Not with the benefit of hindsight for me lah. Whether or not it's a good investment. Because in hindsight, everybody is what. Now, to your point, it's great that you brought up because there are scenarios where just on the qualitative alone, it can be a great investment. But do take note as well that there are many companies out there with a story that if you do not read the financials, would lose you a lot of money. Case in point would be Sabah Dynamic,
Yes.
right? So the reason I say, like I said, is 50-50 is because at the end of the day, investing is complicated and you need to take note of everything. So that's one. Number two is actually they're not like making the distinction between quantitative and qualitative is important, but you also got to realize that they're actually incredibly linked. For example, you can know through the quantitative roughly how management behaves. You can know through the quantitative, or at least the reported figures, where they are heading, right? How they've improved, right? I mean, we talked about Greatech as well in our previous deep dive. That is the, I guess,
The A
opposite.
plus, totally opposite of Genetech.
Yeah, because if you had read the financials just on the prospectus alone, it's great. So it's like the opposite of, but the return profile is very similar, right? It's not as good as Genetech, I believe, but it's still like multiple X's. So that's why I would say take a look at both, because both of them inform each other, right? The qualitative can tell you what the numbers could look like, but then the numbers also tell you what is possible, I think. So and investing is interesting. There are many different scenarios. Anything you want to add before we move on to the next question?
Nothing. I'll just end it there as investing is an art lah.
Yeah,
it's not science.
correct.
Right. Okay, so the second question we have here is by That Small Fry. Hello, once again. So he asks, is there such thing as too much of a emergency fund?
Yeah, for sure. I mean, if it all depends on the circumstance of the person, but some people are overly conservative without realizing that, hey, they can be more efficient with their capital, right? If you are in a stable job, you're unlikely to get fired from it. Sure, the the world's uncertain and all that, but there are certain jobs that are a lot more secure than others. And if you have a very secure job, then the need for an emergency fund is sort of lower. And if you are properly insured, the need for a big emergency fund becomes even lower, because most emergencies are what? Health, maybe mostly is health
Or car accident.
right? So yeah, I would say that lah. What do you think?
A funny thing, right, is that the moment when I see this question, I was actually pretty clueless. Why I'm clueless? Because I myself, I don't really have an emergency fund.
Right.
So for those that don't know, reason why I don't have an emergency fund is because one is I'm properly insured already, so I don't need to worry about my life or medical or whatsoever. And two, I'm not married.
Yeah,
I'm still
of
single
course,
and I'm
of
still
course.
living with my parents.
Yeah.
So that actually also kind of de-risks the need for me to have an emergency fund, because I can rely on my family members. But not to say that just because you're living with your parents, you can, solely rely on them lah. Of course, you need to have a certain amount in somewhere else. But the purpose of me pointing this out is that it depends on your age and what kind of situation are you in. Like for myself, I'm a single person, I'm living with my parents. I can afford to take a higher risk than most individuals. But if let's say you are married and you have kids, then maybe you need to accumulate some certain amount of fund just in case for the once a blue moon kind of situation that happen.
Or if you're a business owner, right?
Yeah,
so your business can have no money for a long time, then maybe you have to not take any income. So then you need a bigger one. I think another one also is that for those of you who are investors, what I would like to add is that it's hard for people to see it because of the volatility, but actually your investment fund can be your emergency fund as well.
Yeah, that's exactly where I put my emergency fund at.
Yeah. So it's about a mind shift, right? So if you're properly insured and you're in a situation where you are quite well insulated from external shocks, then treat your investments as your personal emergency fund, right? It's not a bad idea, but of course, if you don't have these conditions, if you have a family, if you're running a business, then I know people who have 12, 24 months of emergency funds, right, of their expenses. Mm-hmm. So really, yes, it's possible to have too much, but look, at the end of the day, sometimes it's hard for us to optimize, what is the right amount? Is it 3.4 months or 2.9, right? We don't know. But it's always better to have too much than too little. That's all I would say. So if you think you have too much, it's not really a big problem. It's just a question of, hey, can you do more with your funds? But if you have too little, that is a big problem for sure. Thanks for staying all the way, guys. I know if you stayed all the way, it means you like the video, which means that you are now forced to share with people who may like this video as well. But really, it's just for the algorithm, So thank you, and see you in the next video. Don't forget to follow us on our other pages like Instagram and Facebook. Join our Telegram group for our latest updates on any new events that we might be posting. And see you in the next video.